You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' music means it's time once again for the option block. My favorite, hopefully your favorite too, bi-weekly source for all things options related. A little bit of options wit, some wisdom, some analysis, some what's trading, some unusual activity, stir in your questions, and some strategery, and a nice fine layer of peering into the future, and you have the delicious cocktail that is the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, ever-spectacular Options Insider Radio Network. 15 programs for you guys to choose from, including all the 500-plus archived episodes of this here option block program. Easiest place to get all that goodness, of course, the mothership, the flagship, theoptionsinsider.com. While you're there, click on the Insider Radio Network tab, and your audio journey has begun. There it is. We're also joined, of course, we're hearing a little noise here in the studio as we have guests coming in fashionably late, as always.
It was all Andrew's fault.
Yes, indeed. And of course, you can always find our content, iTunes, TuneIn, Stitcher, and so on and so forth. And also joining us on the old program, while I get the live people set up here in the studio, let's start off. Mr. Uncle Mike, go in the order of that proximity. Welcome back to the Option Block program, sir.
I am here, excited about another week, another day on the option block.
All right, and we are also joined by Mr. Steve Clausen, a major domo of all things options over there at Options House. I think I like how I updated your title there, Steve. Welcome back to the program, sir.
I like that title.
You should put.
It's great to be back.
And we are also joined, if I could turn them on, let's start over there for you. In person, how is this the rare treat? The Rock Lobster himself, Mr. Andrew Giovinazzi, all the way from Maine and now locally via the old Option Insider Studios. Mr. Rock Lobster, welcome to the studio, sir.
I'm agog at the technology in the studio. This truly is the capital. There's way too many wires in here, everybody.
There are quite a few wires. And speaking of which, while I get all those things set up, Mark, why don't you lean over and talk into his mic while I get you set up?
Okay.
And because you guys surprised me at the last minute there, but it'll all work. And just say hello to the people.
It's good to be here. We're excited. It's great to have Andrew in town. We got a big week here in Chicago, Mark. Lots and lots of stuff. We've got the Option Pit Westmark Professional Traders Summit. We're going to have two. Not one, but two Options Insider radio shows on this week, live in front of the big studio audience at the CBOE. Right as of right now, I think we've got over 50 people in attendance, so it's going to be busy. Sweet. And so we're doing a fun during happy hour. We're going to do the business show, which should be fun.
An appropriate show for that happy hour.
Yeah, it is. We might need to get you live doing, and now the business show.
That costs extra, sir.
It does. Voiceover. It does. And then Thursday we're doing a live option block with everybody here except for my. I'm hearing that Team Tosaw will not be getting a free steak from me, which is shocking. The first time Mike Tosaw has ever passed up a free bone and ribeye.
There you go, Uncle Mike.
Very good point.
Maybe Steve. Steve's a newcomer to the show. Maybe Steve will jump on that free steak bandwagon. I don't know. It's a tempting offer.
I didn't know if free dinner, lunch was included. This is awesome.
There you go. See, things get better every day. Speaking of getting better, let's get right to the meat of it. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block. Like the name implies, this is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. We are recording this and indeed streaming live. I didn't get a chance to mention that at the top of the show, so welcome to all you folks over there in the old Mixlr chat room. You guys can always follow along, MIXLR, or of course just follow us on social media and we'll tweet out the link and Facebook out the link ahead of time. You don't need to have a Mixlr account unless you want to chat with us. Then you do, but you can always hit us up via the old social media platforms. Again, we are recording this and streaming it live on Monday, July 18th, for all of you guys playing the home game. Not able to join us live, and a bit of an upside day, but nothing too unruly here. Most of the major indices up fractionally on the day, with a section of the Qs and NASDAQ getting a nice boost, up about 0.75 of a percentage point or so, driven primarily by that acquisition of ARM. Not the sexiest of names out there. We don't hear a lot about ARM, but they pretty much power all of the mobile devices you guys probably have right now. They design a lot of the chips that Apple and Samsung and everybody else kind of licenses. So behind the scenes, very much of a big deal, even though not really a big consumer-friendly name. So that, of course, giving the NASDAQ tech-heavy land a huge boost, whereas everything else today was kind of meh, which is surprising given earnings. We'll get to all that in a little bit, but Mr. Rock Lobster, you don't get to come in studio very often. So I think we'll start with you, sir. I know you've been busy traveling. You don't get out of Maine like once a year or so, so I think you're still blinking to the bright lights of the big city here. But that aside, what caught your eye in today's activity, sir?
Well, after being blown away by the bright lights in big city, mostly the market non-response to the Turkish non-coup.
Non-coup.
Now, normally, kind of a NATO member gets taken over, everybody gets worried. VIX down on the day.
Yeah.
What the heck?
Yeah, and now the rumor is that the guy made up the whole thing, and maybe it really was instead of a high treason coup, it was a no treason coup or a low coup as opposed to a high coup. And in addition, I think one thing that did stick out to me today was that bonds and gold didn't do very much, and those have really been the big movers and shakers of everything over the last couple of weeks. And the way they just throttled VIX. I mean, VIX was down on the day, and and it's Monday coming off of a weekend. I mean, they took VIX, the market took VIX, bent it over its knee, took off its belt, and spanked it over and over and over again till the VIX butt turned a rosy shade of somewhere between pink, red, and purple.
Something to match the color of the Turkish flag, maybe.
Extremely red. Exactly.
Well, there was some interesting paper today in the Turkish ETF, TUR. We've talked about it once or twice on the show. It's been a while since we've talked about Turkey, but usually around Thanksgiving time, usually here on the old program. But that said, Steve, I know you're kind of paying attention to a lot of earnings, and there are a lot of earnings kicking it off this week. So what's catching your eye out there this week?
Yeah, I'm liking the fact that there are earnings and they're not all focused in one sector. I mean, we have some more financials following up JP Morgan and Citibank from last week. We had Bank of America this morning. They had earnings, but the sector rallied, possibly on the expectation that Goldman Sachs and some of the other financials that are coming this week will again deliver earnings that people can get excited about. The financial sector staged a remarkable comeback since Brexit, and as you were saying, bonds selling off a little bit means the yields are starting to catch a little bit of a bid, which obviously is good for financials. So that'll be interesting this week. But then we also have some big boy technology companies. Some consumer discretionary companies, some industrials. So we get a little bit of a wider mix of earnings with some good household names. IBM tonight, they actually should be out any moment. Netflix is also coming tonight, and it'll be interesting to see what's going on in all these different sectors.
I'm chill with Netflix.
Yeah, everyone's a little excited for Netflix. Before we get into all the names popping off after hours, Uncle Mike, sir, what is catching your eye in today's activity?
Well, aside from what was mentioned before, the only thing on my watch list that's really kind of sticking out would be my good friend, the fruit company. Got it with earnings coming out next week. It was up 1% today, and I guess that kind of shows how the market really didn't move that much when we're excited about a 1% move in Apple to go through with that. So aside from that, not seeing a lot of movement pretty much anywhere on anything that I'm watching. The only other thing that I would add that I thought was just kind of interesting is, in addition to the non-responsiveness of gold as well as the markets and the VIX, would be oil. Oil really didn't have a lot of movement today either. Oil's just down about 1.5% on the day. So really not a lot happening, but I think this is kind of the calm before the storm. Now, whether it is a bullish storm or a bearish storm remains to be seen, but I do see movement ahead, folks.
Speaking of movement ahead, we should have movement any minute now from a lot of these big names coming off after the bell. As Steve mentioned, we had some already before the open. We had Bank of America, Hasbro, for all the toy makers out there. Too bad Nintendo isn't popping off. They'd have a good one right now with all the pokey catching going on out there. Also Schwab this morning. And right now after the bell, we're waiting for Beamer, Netflix, the old Widowmaker, and Yahoo. Beamer pricing in. They were closing out right about $1.60 or so, and they were straddles going out right about $7.50, so right about a little over 4.5% out there for IBM. Netflix flirting with that 100 handle, or right around there, 99 in that range. Straddle right about 980 or so right about 10% for Netflix. And Yahoo hovering around the 38 level. That's straddled right about $1.80 or so about 4.7%. So we'll see how any of those kick off. But I know you guys have been running around getting ready for your big event this week, but any of those names really lighten it up over there in the pit chat today?
After you.
One of you.
We're both,
two heads are not better than one.
Age before beauty.
Speeches. To be honest, not really. None of those. At least all the straddle prices look fair. So when they look kind of fairish, we don't have huge interest in them. Although I have to say, this financial kick, this is one of like a little drum beat we've had at Option Pit. Volatility getting extremely cheap in there.
Yeah.
Like they can't ever move again, and yet somehow, if the market starts to look better, those are all looking like they have some momentum. It really hasn't died in 3 weeks. It keeps going, Mark.
I mean, and one thing we have seen is that a lot of, there's just some really, really, really cheap calls out there. I was fooling around with two names today that hit our Option Pit scanners. CRM, which is Salesforce, and Ulta Cosmetics. I think Ulta Cosmetics is going straight up. You want to know how I know, Mark, that Ulta is going straight up?
Tell me, Mark, how do you know?
So I'm talking about this morning in the pit report, and my wife walks by and goes, Ulta, I can't walk in that place without spending at least $100. And I went, oh, there's a company that's doing well. If Lauren is shopping there, that is a retail store that is going to be doing well. The other, I was looking out. They've got earnings kind of either the week of the 18th of August or the week of the 26th. In both cases, the volatility premium looked way too cheap in the regular August, and actually too cheap going out. One other piece that was kind of pointed out is that the market has been on such kind of a torrid upward move that all of these crazy people that were out blasting covered calls, this is one thing that can kind of cause vol to go up and can cause the market to pop. Lots of covered call sellers are chasing their short calls, and it was one of the things that was pushing vol up on Friday was that there was actually demand for upside curvature, as a lot of people are really afraid the S&P could blow through 2200 like that. So lots of short covering, but not where you'd expect it.
Well, if you got some shorts on, perhaps right now in the old Widowmaker, you might be a happy camper. Some of the names coming in. I mentioned Netflix pricing in, about right about $10 move or so. Right now, first blush in the after hours off right about 14 handles, so about 14% or so right now, hovering right around the 84 half or so level out there. We'll see if that level holds, if they rebound, or if they keep selling off. Looks like Yahoo, kind of the meh of the bunch, pretty much unched on the day, which is, I guess, not surprising given the fact they were pricing in probably the least aggressive move of the bunch. And IBM also off to the dark side off here, but nowhere near as much as they were pricing in, off about 3 handles or nearly 2%. They were pricing in about a little more than twice that, about 4.5% or so. So we'll see how that one pops off. I know, Steve, you and I were talking before the show saying it wasn't, even though earnings season is kicking off, people aren't still kind of playing wait and see with the options volume. That said, any of these names really catching the eyes of the clientele over there at Options House? Any interesting trades going up or any interesting inquiries on these or maybe some other earnings-related names?
Yeah, what I think is an interesting lesson for everybody is Hasbro. Today, they reported great EPS. They beat on revenues. And then yet the stock was down big today. And why is that? The earnings, the backward-looking earnings, they were great. Star Wars sales were good. They're still selling Frozen dolls or something like that. But their revenue growth it can be so finite what investors focus on. Their revenue growth in the boy category fell off a cliff. So it's like, what the earnings were for the past quarter, they were great. Hey, good job. But then the forward-looking guidance, the forward-looking, the market is a forward-looking indicator. Stock prices are forward-looking indicators, not backward always. And so because they whiffed on a large category of forward-looking revenues and forward-looking profits in the boys category, it's almost like, well, okay, fine, you did well with Star Wars, but now that Star Wars is yesterday's news and all the little boys are playing with Pokemon, what is Hasbro going to do for next quarter? And so that discounted the price. So a lot of times I get customers that say, hey, I was in this stock, earnings were great, earnings per shares were great, they beat on the top line, beat on the bottom line. How come my stock went down 7%? Well, what does the future look like? And you can't lose sight of the fact that not only the actual earnings themselves are important, but that forward guidance and parse out the statements from the forward guidance is critically important for the actual price performance in the stock.
Yeah, it has been perhaps an unfortunate time for them to announce when a boy toy craze is sweeping the world and they don't have a piece of it. So it does kind of it does kind of look worse in retrospect or in comparison to. We were at a big Pokemon meetup in Chicago the other day. Tens of thousands of people, and this thing crashed the servers. This thing is popular beyond, orders of magnitude beyond what anyone ever thought.
Now, do you want to know what's really fascinating with Pokemon? And if Nintendo figures this out, or Google, or whoever, it's very unclear who the big winner is with Pokemon.
Yeah, the ownership's a little obtuse.
It is. Yeah. So stores where there are unique Pokemon have seen 100% increases.
Yeah, you put a Pikachu in your front lobby, you're going to get kids pouring into that thing.
And so I wrote a piece. XRT. In my spare time, I moonlight as an options writer for TheStreet.com, and in my piece last week, the thing I said, there are 2 huge ways that these groups can make money. 1, data. All of these teenagers are like, hey Google, how would you like to track everywhere I go all the time? And Google's like, sure. And in exchange, we'll give you a Pokemon. So Google now knows exactly where your 6 to 25-year-old kid, and if you are, nerdy like me and Mark Longo, 38-year-old kid, where they are at all times. Now, the other piece, and there's rumors about this already, is forming these partnerships. McDonald's is going to host gyms, right?
That's a no-brainer. The second I saw that app, I said, why doesn't every one of these stores have a gym in it?
Yeah, they should be paying for gyms. They should be paying to have unique characters. Nintendo and Google should make more money selling the right to have a unique character than they should on in-app purchases. That's where the real power is. That is where, if Nintendo figures this out, this app goes from being a big winner for them temporarily to being a permanent game changer of their business model and of how this thing. And really, if you look around, I spent last week. I took my nephew and I went on a 2-mile walk so that I could literally pick his brain on Pokemon Go. All right, and then
it's the most exercise you've gotten in months, sir. You look very svelte here coming into the studio.
And then I downloaded the app and caught a Pokemon in a Walmart, and then summarily immediately deleted it. But it is fascinating. I love my nephew. He's a brilliant kid. The last thing he likes soccer. He likes exercise, things like that. But the last thing he's going to do is say, "Hey, Mom, I'm going for a walk," and this app is like making him go for a walk, making him get out, and that's how powerful this thing is. And he's basically saying people will go anywhere to get these unique characters, and there's no other game. I tooled on him, or not tooled him. I grilled him for a good 20 minutes, trying to get him to come up with a game that could be created in similar fashion. And he couldn't really find a lot. He couldn't think of a lot.
Well, this was a pre-existing game that Google had developed ages ago called Ingress with that company Niantic. I think Google had a piece of them for a while. And then they just took that same data.
They own Niantic. It's owned by Alphabet.
They took that same data that they built around this Ingress and this flipped the switch into Pokemon, and it was genius.
It is.
Because now instead of going to get some generic orb somewhere and capture it, you're going to get a Pikachu, and kids love that. And so it makes total sense. And I'm waiting for the branded, Pikachu brought to you by McDonald's or whatever.
I think you're going to
here for a limited time. Come here now.
Yeah,
huge. They showed a video. One of our earlier guests today in the show showed me a video of people stampeding each other to get to Charizard there in not Lincoln Park, in New York City.
Things that I'm glad. Yes, the crazy. Things that I'm glad I tried and didn't like. A few illicit substances from college, and Pokemon Go.
Now, I'm sure every broker out there is thinking, how can we figure out a way to work us into that? Every firm out there is trying to think of a way.
Yeah, no, if you do,
it's madness.
You do $250 with a brokerage business at Options House, and we'll give you a secret location where we have who's Pikachu's mom? Pikachu's mom.
Pikachu's mom.
And you can capture Pikacha. I think her name is Pikacha-cha.
Isn't that an iteration?
That
what
would
is
be
it
awesome
called?
if that was true. I hopefully it is not. But it would be awesome.
I don't
yeah.
know.
So what do you think? You're gonna set up the, you're gonna set up a secret. I mean, the amount it's talk about earnings growth. You guys would just crush it.
I don't know, Steve. I think that's a good idea though. A nice dedicated Pokestop right in front of the OH HQ there. People, they defeat your team or whatever, they get 50 free trades, something like that.
I like that.
We are definitely trying to come up with strategies to appeal to younger investors to get them to start thinking about their own investment portfolios. If their investment portfolios revolve around capturing these little Pikachu things, I think we're all for it.
What if you maybe stick like one share of Google on a Pokemon forehead or something?
Oh, yeah.
They go grab it.
What if you
that opens the account for them?
Yeah, you can convert. You can convert if you capture Pikachu. Show Options House, and they'll give you 1 share of Apple.
I like it. I think everyone's talking Robinhood for millennials. Forget that. Skip the millennials. Get right to like the pre-tweens. Get them early and say, hey, you capture, a Pokemon.
And it evidently lasts until they're 38 years old.
Oh, there you go.
At least
38 years old.
You get an 8-year-old, you give him 1 share of Apple, you put it on a drip. By the time he's 25, he's got $1,500 in his account, and he's going, boy, I'm gonna start trading them up in that Options House. They gave me my shot.
And they get older, they have kids, and it just keeps going. It's in perpetuity. I think we've hit on the next big thing.
All right, expect my my advertising consulting fee bill in the mail.
That's called compounded investing, something like that.
Compound Pikachu.
Interest?
Compound Pikachu phenomenon. I think that was Einstein's other thing he really loved. Compound interest and compound Pokemon.
Yeah, Pika compound.
Pika compound. Speaking of things that are hitting it up, we talked earlier this month of numbers out of OCC about June being a big month. Surprise, surprise, for options volume, and our friends over there at Tab parsing the numbers a little bit more as they are wont to do, kind of coming in line with some of the stuff we said coming out of OCC. It was the highest monthly volume since August 2015, and that June's volume 18% higher than May and about 10% higher than a year ago for June. Interestingly as well, index and ETF options about a little over half, actually, about nearly 60% of total volume in June. Again, showing when you have such big macro events, it's not surprising that the indexes would dominate a lot of it. That was the highest concentration for those two since 2012, so quite a bit of a change there. And ETF options, all you guys out there love to sling SPY and VXX and maybe Turkey these days, TUR. They accounted for nearly half, 45.1% of volume. That also was the highest percentage since 2012, while index options about 12%. So ETFs, it's kind of a weird demarcation because where does SPY fall in that? You know, it's clearly an ETF, but also an index, so it's kind of a little bit of both. But that said, interesting stuff. I don't know, Steve, is this kind of dovetail with what you guys are seeing over there at OH last month with these kind of numbers, or is your audience taking a little bit of a different bend?
No, absolutely. The market doesn't like surprises, but volume sensitive establishments such as exchanges and brokers, they love surprises because those are the biggest trading days of the year. And like you said, yeah, people gravitate towards the macro, the broad-based indexes, the broad-based ETFs, and they rush to trade them. I mean, and they're liquid, so it's a good thing that they do that. But absolutely, you see this in whenever there's a big surprise. We know it's going to be a big day. The real question is whether it can last. And when you have a Brexit type event which creates a big sell-off, and it turns out in retrospect to have been a great buying opportunity, that does sort of train the investing public to be ready and with dry powder, ready to pounce when we get these outsized moves. I just find it remarkable on not only how quickly the price recovered, and now we're knocking our heads against all-time highs, but how quickly the volatility can contract. And it really tells you that the market is very efficient, very quick at determining value. And, it does go a little bit too far both ways sometimes, but it's definitely self-corrects awfully quickly. And prices that you get in the marketplace, in a free and open marketplace, are really, the correct value for that point in time.
All right, I have to leave it there as we keep on rolling into the darker side of the options business. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show where we break down to the weird, the wild, the sometimes just bizarre corners of the options market. Mr. Rothlops, you haven't done this in person in a while. Are you ready, sir? Are you ready to go into those dark corners? Do you have your flashlight and your fedora in hand?
I always like hearing the theme song live.
It is
feel
fun.
like that's Dick Dale right there playing it for me.
It is kind of fun. No copyright infringement intended. Just a homage.
Just an homage.
If you will. All right. Let's kick things off with one of the weirder ones we actually saw today. This kind of came in late breaking. Some people were asking us about this. So we didn't write it up on the site, but we do have it for you here. This is what we were just talking about before, the aforementioned iShares MSCI Turkey ETF, ticker symbol TUR. We talked about this once or twice kind of jokingly on the show before, Andrew. Closing today, $39, only off a couple of handles, which is kind of surprising given the coup, non-coup, call it what you will out there. Hundreds of people are dead, so something did happen out there in Turkey. Thousands of people arrested. A lot of crazy stuff going on over there in Turkey. So people, not surprisingly, thinking this would actually drive this thing down quite a bit. certainly some paper to that effect. We saw there is a huge open interest, if you look out here, Mr. Rock Lobster, at the 30 handle in August. The AUG 30 puts have about 23,000 contracts open or close to them. We saw over 30,000 trading out there today. It looks like this kind of started a bit of a back and forth frenzy. Started out, someone was blasting out a bunch of them for 25 cents. Looks like maybe closing out what open interest they had here. Then as the day went on, clearly more went up as buyers and sellers started tugging over that 25-cent mark. They went out at 15 cents at 20. So maybe the 25-cent sale was the wiser of the two. But I know you on a plane today. You haven't had a chance to watch this. But hey, kind of your thoughts on you mentioned the non-reaction of VIX. The TUR also kind of somewhat shrugging this big news off. Maybe that's an issue with the construction of the ETF as much as it is that. And then B, maybe this well-timed or perhaps not as well-timed. These puts are actually open interest. I think opened a while back. So it wasn't like it happened a day or two ago. Someone, maybe like this cleric who's supposed to be behind all this here in the U.S. wasn't out there loading up on these puts in the last week or so. But still, the old Obama, the old Bin Laden puts theory from back in 9/11, of course. But still, interesting stuff. Have you had a chance to mull these over at all?
Yeah, I believe the Bin Laden puts have expired, actually.
They finally, just last week, they were super leaps. Not many people know that. He didn't really know the time frame of what was going to happen. He just knew something was coming in the next 15 or so years. So he put on a flex.
Exactly. And unfortunately for him, unfortunately for us, it expired. This looks like, you know what, they're selling, the TUR is trading 39 or so. They're selling the 30 puts. You know, I think Turkey kind of has this history of sort of funky political uprisings. The market tanks, and it always turns out to be kind of a buying opportunity, it looks like. So I just think for where they were, 25 cents, the vol was pretty astronomical. And relative to the kind of volatility you could sell right now, it probably got somebody excited and somebody else just dead panicked. So I think maybe it was a combination of the two. Somebody was a little cooler head and sold them, but somebody needed to cover something, and I think that might have been part of it. And all of a sudden there was a bid for those things, and then that bid went away. It looks like about as fast as it showed up, 25-cent
little Turksit action.
A little Turksit?
Turksit? Can we call it that?
We could.
We could indeed if I had you on, but I turned you off because you were running around. Well, I'll have to reconnect you again as you move on to the next segment of the old odd block. This one's easy for us to get right. We were writing up NE, but these are actually, I believe, the NBL. Mm-mm. Is that correct, or is it really NE? Mm-mm. In which case we have
it's Nobel Energy. NE.
So Noble Corporation. Then there we go. Yeah. That's what we were flipping around Noble about here today. Good old Noble Corporation ticker symbol. Yeah, NE. Closing today. This is our resident cheapie on the day. Closing down is $8.43. It's the name that does about 5,400 contracts a day, doing a whopping 43,000 today. About nearly 20-to-1 calls over puts. That should give you some indication of just exactly what was catching our eye. And in particular, it was some size paper out here. In the weeklies expiring on the 22nd, actually 8 calls doing some serious size. We started off with just about 800 or so catching our eye. Looks like paper buying for about 55 cents. As the day went on, the volume poured in to the tune of over 31,000 actually to be precise here on open interest of just 200 actually, 200 contracts here. So very, 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 very near term, super size, super aggressive, super bullish. So clearly, this guy wants this thing to plunge, right, Mr. Rock Lobster? Is that your take?
Yes, he wants it to plunge to zero. Now, I think the biggest thing too is earnings are next week, so somebody's actually just buying these on spec for this week and ignoring next week totally. Now, so far they're pretty right. The calls are up. I don't know about a nickel or so, but. You've got earnings next week, but they're buying them for this week.
Yeah, there was something smelly.
And we were looking around for news or anything. We couldn't find anything as of today, but it certainly was. Let's just call it exciting. It's some exciting call buyers. We'll put it that way.
Yeah, there's definitely something extremely smelly about these. These are the type of trades that remind me of things like, call buying in Monsanto, or
call buying in Hershey.
Or call buying in Hershey. This thing This thing smells like something the same color as Hershey. Let's just put it that way, in terms of how fishy it might be. So I think everybody keeps expecting some major consolidation in the energy sector. Oil's made a bit of a recovery. Maybe Noble still kind of having some problems. Maybe somebody's going to come in and scoop them.
Yeah, it seems that way. This is very aggressive, very near term, very super bullish paper. So keep an eye on this one, listeners. We'll keep an eye on it, too. We'll file it in our to be watched category. In fact, I will make that note right now, listeners, so we can follow up next week and see how our friends here fared in good old Nobel Energy as we move on to another one, another ETF, looking at a little troubled region of the world, though perhaps not as troubled as TUR right now. This is RSX, our old friend. Haven't checked in on this bad boy in a while. Ticker symbol, of course, RSX. This is the Market Vectors Russia ETF. Closing today right around 18.5 or so on the day, up about 1% or so. This is the name that does somewhere in the ballpark of about 6,000 contracts a day. So pretty decent paper from an odd block perspective. And lighting it up today to the tune of about 20,000. And Mr. Rock Lobster, a little bit of a different script. Same intent, longer time horizon this time. In particular, it was some gobbling up of calls, gobbling up of some really near out-of-the-money calls, but not doing it expiring next week. They're waiting all the way out, a comparative eternity, all the way out to Jan of 2017. That's where they started gobbling up these Jan 2017 20 calls. Started off buying about 5,800 of them for 78 cents. As the day continued to unfold, a total of nearly 17,000 going up on this strike. This is all on some pretty size open interest, too. About 23,000 open of these calls on this strike. So it could be perhaps someone coming back in to cover some of these bad boys as well. Looking back at the past year or so out here in RSX, of course, we all talked about it last year when there was the troubles in the Ukrainian region that the RSX taking on the chin. Of course, the oil problems have also plagued it. But ever since the turbulent kickoff to the year, RSX has looked pretty good. It's pretty much been on an upward tilt. It's kind of been vacillating for the last few months, right around the 16.5 to about 18.5 range. Clearly on the upper half of that range right now, Mr. Rock Lobster, but that is not dissuading our friend here from piling in. He's saying the 20 handle and beyond by Jan of 2017. What say you to our friend and his endless upside love for RSX?
Well, a couple reasons. One is, there's the election coming up. Maybe our relationship with Russia might change. But they're either covering some short calls, which seems a little early, or the short cover is just saying, you know what? I'm seeing this movie. I see this thing going up. I want to buy the calls back. Or I just want to get longer because basically the RSX is so cheap. They basically, when it was $12, you could have the Russian equity market for nothing. So it's still, as an index, is as probably one of the larger country indexes, is still pretty cheap. So I just think somebody's making at very minimum, they're covering short calls. At most, they're making a long-term investment. And I have to say, they're probably going to make money. It seems like a lot of these beaten down ETFs, like BRIC countries, all this kind of stuff, emerging markets, I think they're all going to slowly be kind of crawling out of the basement. And for what reason, I really don't know. There's no clear picture on anything there than there was in January or February or August or actually anything. So, but for right now, money is starting to pour back into equities, and that's what it is. So I think RSX definitely has a chance to at least be a $20 stock again.
Steve, I know you've been watching RSX a little bit as well. What are your thoughts on these calls? Short covering, something else entirely? Where do you fall on this?
Yeah, I think there are two things happening here. One is liquidity attracts liquidity. So I think quite possibly somebody who was short these things is saying, wow, I've ridden these things down. The Russia's coming back a little bit. The underlying's coming back up. Obviously this thing was over $20 6 months ago. But 86 cents, 85 cents, 80 cents. They're a 36 delta call. I mean, so they're kind of a meaty call for 85 cents. So you could either be exposed to Russia by buying the absolute stock at $18.50, or you buy these little calls and have 36% of the upside risk right here, right now. And obviously that number grows as the stock does appreciate. And if it goes down, your maximum loss is what you paid for it. But the other thing is, you mentioned that, a trade came in for several thousand and then all of a sudden it started trading, right? So I do think there are so many hedge funds out there, so many institutions out there, so many retail investors using options house tools out there that are watching unusual volume. And when they see unusual volume, it attracts more eyeballs. And when there are more eyeballs looking at it, there are more opinions looking at it. And when there are more opinions looking at it, there are more buyers, there are more sellers. And so I think volume really does beget volume, or liquidity begets liquidity, right? And you always say, well, what started it? What happened? And all of a sudden price discovery happens when there are trades. There's truly price discovery. And when there's price discovery, you get a narrowing of spreads, you get more liquidity, you get more trades, and it becomes a more open market. And so I do think that someone was in here for whatever reason, covering a short, taking a little 30 delta punt on the upside, but that attracted a lot more interest, and a lot more interest attracted a lot more trades, and a lot more trades, a lot more contracts.
Speaking of a lot more interest, we'll wind it up here in the odd block with one of my favorite strategies, but done for a wee bit of size. Looks like a bullish risk reversal going up in ArcelorMittal. This, if you're not familiar with this one, it's a holding company, integrated steel and mining holding company. It's also an ADR, if you couldn't guess by the name. It's another one of our resident cheapies, south of $6, $5.78 to be precise. Pretty much up about 2.5%. That's not saying a lot for a $5 stock. This is the name that does decent paper, about nearly 10,000 contracts a day, doing nearly 50,000 today, and pretty much the lion's share of that, about 40,000 or so, coming in that one aforementioned bullish risk reversal. This time it was the AUG 5-6 risk reversal, so a pretty tight one. But again, given the cheap nature of the stock, not that tight. Going up about 20,000 times. Looks like paper blasting out the AUG 5 puts and buying the AUG 6 calls. Again, about 20,000 and change open on that AUG 6 strike. So it could be a bit of a closing there. He could be maybe piling on to existing stuff, perhaps rolling into the short put instead. That's an interesting choice, if that is indeed the use case for it. We don't see, I'm trying to think, Mr. Rock Lobster, the last time we saw someone potentially use a risk reversal to flip the script that way. We haven't really seen that in a while, so that's kind of interesting, let alone doing it on some size out here. This is another name that's been kind of interesting over pretty much the last 6 months, where it bottomed out right around 3.5 in those turbulent waters of January and February. And now, like I said, pushing the 6 handle. Regardless of that, perhaps we had a bit of a covered call situation. He's getting a little nervous with the 6 strike, so he's buying them back and then deciding to flip to buy more at the 5 handle. I don't know, Mr. Rock Lobster, you've had a chance to parse this one a little bit. What are your thoughts here? This just piling on paper, you think? Think this is some guy flipping the script a little bit? Where do you fall on this size bullish risk reversal in MT?
Well, I just looked at it. I'm seeing 20,000 contracts. It just looks like somebody wants to get long. There's a possibility for a script flip. I guess we'll know tomorrow once the open interest prints. But it just looks like somebody really wants to lever that 6 strike. It's only 22 cents away, and granted, MT is not what I would say. I think it is the world's largest integrated steel producer, though. It's pretty humongous. And it's been in the doldrums for a long time. I remember the stock not long ago being $55 or $60. So, they definitely need a boost. They need a kick, and I think somebody just wants that kick for earnings. And worst thing happens, they take the stock at $5. Of course, I don't like risk reversals that you don't get credits for, but they are. I just think this is extra bullish. It is extra bullish.
Andrew, I'll give you credit for that risk reversal. You found it.
There you go. He did.
You get some credit.
He tracked it down, so he gets all the credit. You and your juice for free, sir. You are a diehard juice free.
He wants money for nothing and his juice for free.
That would be a.
I think that's the name of the show.
I like it. We have our title.
There
money
it
for
is.
nothing
And your juice for
our
free.
Juice for
Either
free.
that
All right.
or pokey.
Some way we
or
could.
Pika-cha-cha.
Some way we can work on Pokemon Go as well. That'll count for at least 1,000 downloads in and of itself. All right, before we go too far down the Pokemon rabbit hole, let's keep on rolling. It's Monday. This means it's time for some strategery. It's time for the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the strategy block.
All right, everybody. As Mark is here doing his impressions of our old drops here on the show, we played a new one for you. At least newer. That is, of course.
They had a little Ghostbuster-y sound to it in the background.
The old one? I think you're mixing up your drops, sir. Well, Mark continues to serenade us here in the studio. I will mute you, so I will save you that pain, listeners. But instead, we will turn our attention all the way out to lovely St. Charles, Illinois, where we are joined by Uncle Mike Tosaw, who is ready, willing, and dare I say able to hit us up with some options, wit, and or wisdom. Uncle Mike, my minions, they've been chowing down the jam. That's why the studio is so crowded here and so full of empty jars. And they're whispering in my ear in their broken minionese. Something about diagonals, maybe diagonal call spreads. Did they get it right, or do I need to beat them mercilessly yet again?
Oh, the minions are geniuses, as always. And for those of you that have not seen The Secret Life of Pets as of yet, there is a little minion short.
Yeah, a minion short, which is
it.
almost better than the entire Minions movie. So you're pretty much good right there. 10 minutes and you're out. Have at it, sir.
All right, off of minions onto diagonal spreads. What I want to go through today is a strategy with which you might consider in a lower volatility environment. Now, what is lower volatility? That means that implied volatility is at lower levels based on what you think it is. So in other words, just because I say volatility is low, just because Mark says volatility is low, doesn't necessarily mean it's low, because it can always go lower. So step one, make sure that you feel that volatility is low, meaning that you believe it's going to go higher. With that being said, one thing that you can do, and let's go through the strategy itself. Let's say that you're looking at XYZ stock trading around $30 a share, let's say, and you believe that XYZ stock's going to go up. You don't think it's necessarily going to go up super fast, but you do think it is going to go up. You are bullish on it. One thing you can do is buy a call option, maybe 6 to 8 months out. You can buy perhaps the 25 call, the 27.5 call, the 30 call, whatever call you would like. But usually I like to do these a little bit in the money if possible. And then with that, the advantage of doing such a thing is that you have upside from the call option. And you have a limited downside risk. It's not possible for you to lose more than what you have invested in that option. So with that being said, the downside is that you are going to pay for all those privileges, and you pay for that with the time decay that you're buying within that option. There is extrinsic value in that option. At least there is somewhere, unless you're buying a 99 delta option or a 1 delta option. You're going to pay for it through the time decay. So how do you finance the time decay? Well, the simple way of doing it would be to sell another call option in a more near term. And that would create a diagonal spread. So let's say that you bought the 25 call, maybe 6 months out. Perhaps you could sell a weekly 32.5 call for a much smaller amount. And for that week, you have to kind of sweat it out, make sure that the stock doesn't go up to 32.50. Now, in terms of how do you make sure it happens? Well, there's nothing you can do about it unless you're a very large multi-trillion-dollar fund of some sort that I don't know about. You're not going to be able to control the stock yourself. But the disadvantage of that would be, of course, if the stock were to go above 32.5, if that's where you sold your short call. Now, with that, let's say the stock were to stay the same or maybe go up from 30 to 31, and that call could expire worthless, or you could get out of it for a nickel in some way, shape, or form. Well, by doing that, you're out of that short call. Your obligation has been met. On to the next week. And you can continue to do that as a means of financing that long call option over the course of the next 6 to 8 months. Now, sometimes that's a way with which to go. Sometimes that doesn't make sense to do. The other things with which you could do if volatility were to go higher, and let's say that the stock itself didn't go quite down a lot, but maybe you had a spike in implied volatility, maybe 1 week or 1 month, whatever time frame you would do, you could try and finance this by selling a put spread. By doing that, you're still getting premium that's coming in, but this way you'll have unlimited upside for that time frame. Another way with which you could do this would be to sell a call spread again instead of selling the call itself, and just the call itself. Talked about that a little bit on the last strategy block with doing that with the stock. So the concept with which it makes the most sense to do this is if you feel you're in a low implied volatility environment. And the reason that is because when you buy an option 6 to 8 months out, you're locking in that low volatility for 6 to 8 months. If it's a higher implied volatility, and let's just forget about underlying movement for a moment, and let's just look at volatility in a vacuum. If you're in a higher volatility environment and volatility itself goes down a lot, then the value of that call option is going to go down a lot. And the value of the weekly put spreads or the weekly calls that you sell against it is going to go down a lot. So the main advantage of doing something like this is that you're able to lock in that lower volatility for an extended period of time. In terms of how to finance it, like I said, the simple way would be to sell a call option against it every week or every month, every quarter, whatever way you want to set it up. Not always a fan of that, but that is a way with which to do it. Sell a call spread, so that way if for some reason the stock does just all of a sudden find the cure for cancer one day, you can still be a part of that stock doubling or tripling or whatever the case may be. Or if you're getting an increase in implied volatility, one thing to consider would be to add a put spread to it. Now, once again, if you're doing this by adding a put spread, it's going to take on more risk from a monetary standpoint, and you'll have to have more capital available to do it. So plan accordingly before you get into something like that. That is the strategy block for today on Monday the 18th in this potentially low volatility environment.
See if a Turkish coup can't do it, then maybe earnings can do it. Maybe Miss Yellen and the return of her team can do it. Maybe something can come in to juice this vol at least back to those pre-Brexit levels. But we'll get to that. We'll get to what's on the horizon in a minute because it's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. This is indeed the portion of the program where we tell you what's on our radar for the rest of that week. Before we do that, actually, a quick check-in on some of those names we were talking about at the top of the show. IBM actually off to the races now, up about 3% after having an initial much more meager response. Still not approaching that 7.5 or so. They were they're pricing about nearly a 5% move, about $7.50 move, only about 480 or so, but still a little bit stronger than before. Yahoo still effectively unched. I guess the market has already beaten them up enough. Apparently right now they don't feel like taking it down any further. Not so much for Netflix, though, which continues to expand its move to the downside, off about 15.5% now, or at about 15.50 right now. So it's right about, it was at about $100 right when we started talking. Now hovering right around 83.5 or so. The old and they were pricing in about a $9.80 move, so right about a 10% move, and already having well exceeded that. So the old Netflix, the old Widowmaker, showing its ability to strike to the downside yet again. And of course, since we're talking about earnings, it is indeed an earnings-heavy week. Coups and other macro events notwithstanding, let's focus on the near term and, of course, what's going to move us. Yeah, coups. Coups or no coups here on the old show. Let's kick it off. Tuesday, we've got EA, so as well as Electronic Arts, of course, as well as Goldman Sachs and IB. And good old Softy, mixing it up this week, coming a little bit different. Usually they come on the same time, right around the same time as Intel, TD Ameritrade, flipping it this time. Easy for me to say. Intel is Wednesday, as well as Morgan Stanley and Amex. Thursday, we got AT&T. Chipotle, no longer the stealth anything. It's just when will they have the next explosion?
The only thing you get is it's got some. There is something stealth about it, but it's not something you want to know about.
Nothing you want in the stealthness. Stealthy, whatever the noun
it's a
is.
Stealth
there.
diet.
Yes. Duncan, of course, your favorite, as well as E-Trade, GM. I said AT&T, Marriott, Pandora, and then Friday, GE, Whirlpool, and American Airlines. So not a lot of names kicking it off this week. I know, Steve, over there in your blog, you guys at Options House have really been focusing on earnings. Which of any of these names you think are really exciting you, and also which names do you guys see a lot of interest from with the OH clientele whenever earnings season rolls around?
Yeah, personally, I'm watching Goldman Sachs and Morgan Stanley for investment banking activities. See if that area of the financial sector is picking up at all. American Express and Visa will give us an indication on the consumer. Are they spending money? And this week we haven't really touched on it that much, but for entertainment purposes, we have the Republicans gathering in Cleveland. Who knows what's going to come out of that man's mouth?
Yeah, certainly poised for a lot of potentially market moving events. Could be good, could be bad coming out of the RNC convention this week. It'll be huge.
It'll be beautiful. It'll be big.
It'll be the most exciting, market moving, hugest convention for the Republicans, the party of Lincoln ever.
So I can take it by that interesting impression that you guys are focused solely on the RNC to the detriment of all other things in the market. That's all you guys care about right now.
No, actually,
nothing but RNC.
Until Steve brought it up, we hadn't thought of it, actually. We played. Andrew and I were actually hanging out at the Pokemon gym all day, fighting. My Pikachu beat his little turtle thing, whatever that thing's called.
I don't know. Daramaka, that's what they've given me for their Pokemon.
There you go.
That's as much as I know right now.
I mean, I think you got to watch earnings. We got the Fed next week, I believe. And, it'll be interesting to see whether things bottom up. VIX expiration, right now, it looks like they are intent on plummeting VIX into expiration. I think there's an off chance we get an 11 handle for a settle. And the way they are slapping that thing around, who knows, maybe a 10. But that's what I'm watching. This VIX settlement they're really, really pushing things down hard. So that could be, let's just put it this way. Last Thursday, I happily paid 7.5 cents for the 13 puts I was short in Carbon Line Capital, and very glad I did so.
That was a good purchase.
Thank you very much.
Says your risk manager. Buying puts always a popular trade.
Well, we were covering a short.
With the risk manager.
He never has to beat me over the head to close the short. Yeah, it's fine. Yeah, it's a good time. Close it now.
Has a risk manager ever said no to closing out a short in the history of time? I don't know. I'll have to look that up. Maybe once.
Not this one.
All right.
By the way, slight non sequitur. Back to IBM. When was the last time IBM had an uptick after earnings? It's been like, 6 quarters?
It's been. I was looking at that. It's been quite some time. Yeah.
Been a long time.
I'm not the diehard follower of Beamer that I used to be.
Ago.
Just for old line technology, if IBM could actually put in a decent earnings report, who knows?
Does speak a lot for the old school era, old school tech, old school software or new school maybe software as a service, kind of driving it up. Maybe the ARM deal somehow accretes well to them. I don't know. Obviously, people liking what they're seeing out here, and certainly for the guidance going forward, certainly positive. Speaking of positive, Uncle Mike, always positive, always the resident bull. What's catching your eye for the rest of this week, sir?
Well, I want to continue to see if this bullishness can go on forever, which of course it has to. It never ends, does it? Watching that, and just also watching gold is at a point to where with GLD it's pulled back a little bit since it's a Brexit rally. So wanted to see if this pullback is a buying opportunity or if it's just an altogether breakdown of the shiny stuff as well. Someone recently, I believe it was last week, bought a ton of puts at the 125 level. So want to see where that goes, and that's pretty much it at this point, along with everything that was mentioned. What I want to see at the Republican National Convention, I'd like to see Vince McMahon be a guest speaker. I mean, come on, Mr. Donald. You've been in the WWE. You've actually been part of that. Let's get Vince McMahon out there. Let's get some pro wrestlers up there. That's what I want to see.
First Hacksaw Jim Duggan, now Vince McMahon. Your WWE/F-Love. It will never abate, sir, unfortunately.
No.
How about Miss Universe?
Oh, there we go.
You know they need to get up there is Ric Flair. Get him up there. Woo!
I think Trump actually just should parade his ex-wives and his wife up there. That probably should draw him some ratings.
Yeah. I get Marla Maples and the first Mrs. Trump to get up there.
before we show our lack of knowledge of Trump's
what was her name?
wives.
Ivanka? Was that her, or is that the daughter?
Ivanka's the daughter. Put the daughter.
Yeah, don't get the daughter. Don't get the daughter in there as well. Then it get all kinds of weird. Before we get all kinds of weird, that theme music means it's time to bring to a close this episode. Very faint music. Bring to a close this episode of the Option Block. But before we go, one last time, let me check in with each of my cohorts here, my partners in crime. Let's start with you, Steve. Obviously, we were talking about what's been potentially lighting it up over there in the land of Options House. But what are you guys working on? I know you guys just finalized the FCM very recently, so that's big news for you guys. What else is coming down the pike? What else is exciting? What else you want to let our listeners know about over there in the land of Options House?
Yeah, one thing I want to call it is the importance of closing down those short teenies. When you're short an option, when the option is under 10 cents, it has all risk and it has very little reward. We were talking about those 13 puts. It's 7 cents, below 10 cents. You have 7 cents that you could potentially make, and you have all the risk of being short a put option on those things. And at Options House, we feel so strongly about that we have instituted a program called the Dime Buyback, where if you are closing short options with premiums of 10 cents or lower, we don't charge commission. We want to try to encourage good behavior, good risk management, and that is a huge value to our customers. Whether you're short a call and overwritten a call, or you're short put options and you're doing cash secured puts, when it's all risk and very little return, go ahead and close them down and don't worry about it. You know, we make those commission free. So I do want to highlight that feature of the Options House platform.
Steve, that is awesome. And I'll tell you, let me tell you, Andrew, you're fired. Steve, you're now hired as Director of Risk for the Carmen Line Volatility Fund. So,
by the way,
amen. Welcome aboard.
He's telling you just
amen.
about the
Thank
easy
you.
parts. He's not telling you about the hard parts.
Yeah.
There are hard parts.
There are. So, no, I love it. That is, we always, I was just telling a bunch of people today, all ABC, always be closing. Always be closing. That should be like part of the lead-in video at Options House. And, Steve, the other thing that I like about that, and I'm going to take a couple minutes just to talk about how much I like this strategy, is I bet you what you'll find is that the guys that take advantage of that free commission actually end up making more money, because by closing that option that's worth 8 cents and rolling it back, opening the following week or the following month, they're actually going to produce more income. Because those will typically be out of the money options. And, we found over and over and over again, if you close your option worth 5 cents and sell the same strike a month away, 95% of the time, you collect more premium on what you were selling than you would have made from buying your option back. So this is, on top of the fact it's going to be a risk, it's a brilliant risk move, and it's going to cause your clients to be, in theory, less risky. I think the guys that take advantage of this, or women, will end up actually producing more income, making more money, and will see those accounts grow by a significant amount. So my hat's off to Options House. You guys are hired.
Thank you.
There you go, Steve. Getting a steak. You're getting a job here. Come on the
Whoa,
show.
whoa, whoa,
This has been
whoa,
quite
whoa.
the. This has been quite the week for you. The show for you.
We got to talk about that steak after that endorsement.
One show and you're just getting all the goodies lined up. But I do concur. We pretty much like to work with brokers who do that. They incentivize their clients and their customers to do the right thing, and giving people free trades below that dime and that buyback threshold. It just makes sense. It's risk off the books for you guys, risk off the books for them. Everyone's happy. I never sat right with me the brokers who like to squeeze that extra little commission out of them. If you want them to do it, incentivize it. I'm glad that you guys are doing just that. And Uncle Mike, turn our attention really quick here out to the realm of all things RCM. What's cooking out there, sir?
It's only happened to me twice, but what I'm always hoping is that sometimes when I'll close out a vertical spread that I'm short, I'll close out the short leg for a dime or whatever it is, and then I'll leave the long leg open that I couldn't sell for anything anyway. Just once. I mean, it's happened to me a couple times, but I'd really like to have it happen with some big money. Just have it the market just go the opposite way and just wake up with an extra 7 figures in the account one day. But that's what I'm hoping for.
That happened with a trade I had on in Hershey's. I was long some July. I had a July-June diagonal. I covered my June, left the July on, and Hershey's rallied 17 handles.
That's fun when that happens. It's only happened to me twice, but never with large money.
And then you know what I did when I made all that money? I closed the trade.
And then he bought stakes. He bought stakes.
You big wimp.
He bought stakes for all of us, which was the nice thing. And last
ABC always beat closing,
there
baby.
You go.
That's right.
But anyway, if anyone's interested in working with an option-based style of financial advisor, contact me at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
And Mark, one last time, really quick, because we are running long here. Give us a quick overview again of your big event this week, and are any seats left available?
Yeah, we do have room for about 5 more people. We're going to have 2 days of all-day education. There's going to be cocktails and in the CBOE. We're going to do a mock trading session at the CBOE. You get to see a live taping of the business show and the Option Block podcast. If you buy the VIP package, you get dinner with me, Mark, Andrew, and maybe Steve if we hook up, among other people. And at Smith & Wolinski's downtown, and there's a Friday master session where we're going to teach you a lot more, and we're going to get into some extra in-depth stuff. It's a steal of a deal, and if you can make it in town to Chicago by Wednesday, come see us. There will be a link in the show notes, I believe.
There will be a link in the show notes. And on behalf of the Rock Lobster and good old Greasy Meatball, who were in person, which is always fun, and Uncle Mike all the way out there in scenic St. Charles, and of course Steve at the OHHQ, and indeed myself. I want to thank all of you out the listening audience for downloading and streaming and subscribing to this show, and of course for streaming live. Those of you who were asking questions in some other language, I don't know what language that is, so sorry we couldn't answer them. We'll get to them maybe once we get them translated on the next show, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.